Hey, welcome everybody. We've got quite some exciting markets here. First and foremost, you can take a look here at how we're looking for a play in Occidental Petroleum right here. This is our live trading room. A credit put spread. And let me explain this for a bit because here's Oxy over here, right here on our screen. Occidental. Now, what you see is a projection from the live trading room. So these are the commentator posts, and then below are the clients, what they can post. So anyway, what we were discussing is that Occidental, while in the energy complex, I think it's going to be a great trade for 2020. There's some at least an opportunity that we could break that support and get down at 37. And I'm not sure about that either, but if there is any downside pressure, it could be short lived, stop hunting, and potential just bailout. What's bailout mean? This is one of the very few stocks, along with eBay, and I sent this out, I think, by tweet. Two things that I wanted to do: credit put spread on eBay, credit put spread on Oxy. I think they're well worth it for the January expiration. Why? Stocks that are down this time of year that haven't performed tend to be under pressure through the first, second week of December anyway, not because of earnings, but tax loss credit. And so generally they kind of like feed upon themselves. So why would I do a put spread? Because I'm selling out of the money premiums on a decline. I get more return in premium selling a put on a decline than you would on an increase in price. Number two, if I want to take ownership of this stock, which I would on Oxy and I will on eBay at around 10% lower prices. So therefore, if we do get some follow through decline, would it be long lived, short lived? Both have eBay and Occidental Petroleum, both have very strong bullish convergence patterns with volume. So that's number two. So anytime that I'm looking for a stock to put a credit put spread on, I may want to own the stock at lower prices, B, take in some premium in the meantime, and the next thing what drives me to do that is that there some undercurrent tone of the market that shows me that there's strength. Seasonally, both eBay and Oxy perform very well after the third week of November. So I might miss the trade. It might not go down that much. I might forget about it. By being engaged in the market with a defined put spread risk, defined risk strategy like a credit put spread puts me in the driver's seat in those categories, and that's why I'm looking at those two. Now, while we were at the Traders Expo, many of you may have taken advantage of our analysis that I put out with our newsletter. And so let me share with you what we also, besides the newsletter, we also have our Algo Room. So the Algo Room is based off the strategies that we created with my program through TradeStation. This is the live trading. I shared the video yesterday. Again, this is our live trading room currently. It's kind of interesting. We had a really killer day short the E-mini S&Ps for traders on the 5-minute model, as I shared with you in Las Vegas. This may be hard to see because the screen is small, so don't yell at me. Don't give me a thumbs down because the visual resolution isn't that great. Take it as an educational standpoint. Some of you kids got to learn this, man. The wires or the Zers, they don't like to be talked down to, and what I noticed is a lot of them don't have a lot of patience. Maybe you're spending too much time on the internet, and there's a lot of BS on the internet. So, you know, look at who you're listening to and look at their credibility before you start judging people. So if you don't like something, if you give it thumbs down, hey, I don't mind. I go to a restaurant, the steak sucks. You're getting a thumbs down from me, but I'm going to tell you why the steak sucks, right? It was foul, it was rancid, it was too tough, it wasn't prime grade, you're cheating, you thieves, something like that, right? And I'm going to let you know. But to give a negative thumbs down because you don't like the resolution, this is a free video, guys, so please, if you like and you can listen, you'll learn. On Thinkorswim, we have phenomenal tools. On TradeStation, the Algo Optimizer, it's something that we could take in as we explained. If I'm trading the S&Ps and I get a sell signal and I get identified that I'm in a short, I can say, gee, when I get that 5-minute sell signal, what's going on with the dynamics of the market. Well, here is what we did. We broke it down, and this is how I trade. If I'm trading S&Ps, I like to look at the spider, the cash market, and I look at the advances versus the decliners in the spiders. I don't like the trend or the tick because those are breadth indicators that do not really reflect the S&P 500. It's the NASDAQ composite and the NYSE. So that's number 2. Now I'm looking at the volume. So I want to see what the volume trend is. If the volume trend is weakening and the momentum turns red and I got a price sell signal and the advanced decline is starting to decline and I got a sell signal in the cash market, why wouldn't I take that as a day trade? So rewind this part of the video and say, what did he say again? Because that was important information. Here we have a SPXL. Our daily model is flat. And while we did make new highs today, we didn't have any follow through. And this is what I wanted to point out. I think in the next, Jay Powell will be in front of the finance committee in Washington tomorrow. We'll be hearing from him. There's no earnings. There's nothing else really out there. I think the market sees some two-sided grinding. We still go through a huge amount of unwinding this defensive play with staples and utilities and REITs and bonds, and people are starting to get the picture that maybe I need to buy dips. With Illinois Toolwork breaking out, with Apple breaking out, it makes it very hard to imagine the global economy and companies aren't making money, especially as we get into the holiday spending spree session. So therefore, gang, I think it's going to be very important to maintain and at least not re-optimize, but make sure that your trading strategies that you've developed with the Algo 17 program are not, I don't think in this environment with smaller ATRs, this is not the time to like trail stops versus take profits on normal profit market tendencies. And for the S&P 500, if you have a sub 22 handle ATR, $500 or 10-point moves on a 15-minute bar is a huge profit. Take it off the table. Don't let your algos give back some of the profits on a trailing basis. That's my message. And by the way, we had a great trade again in the crude oil market. Great trade in gold again today. Look at the gold algo. It really kicked in. And then even the British pound. So this is a follow-up from yesterday's video. I hope you enjoyed it. And again, this is a free content versus what we put out for our subscribers. Lastly, I will do this for you guys and let you just share with you what we are doing. We are in current positions. Now, this is year to date, so watch this. On a year to date basis, stock only, we're up 214%. These are all the longs. Now, you don't see the whole list because it won't fit on the sheet, but this includes the going all the way back since we bought in on GE. We had a bunch of puts on GE against that as a hedge. But anyway, this is longs, and this is the amount of shorts. Longs and shorts combined up 214% cumulative value. Options, 2,654% and climbing. So that's our performance. We put every trade, win, lose, or draw, and we spell it out in the newsletter. So for this week, coming into this week, we're long GE at an average of 10 bucks. We no longer have put options on. We reinitiated a stop. So if GE gives it all back, we're going to give it mostly all back, but we blocked in a stop at 1032. We're long half a position in Regions. We've raised the stops. We're long position in Nordstrom. We're long a half position in AT&T, except for now, today, we trailed our stop and we got stopped out today. I'm not in AT&T anymore, and the reason is AT&T should have performed a little bit better. And by the way, November through December are the worst 2 months for telecom stocks. So I'm all right with saying goodbye. We're only in a half position of Disney. We're trying to add, and we've adjusted our stops. So here's what we're coming into this week trying to buy. Add to Walt Disney. Trying to buy a pullback in Nucor. Wells Fargo. We did get filled on half that position, by the way, but we got filled $1 lower. 3M. We're still working those orders to get in. Tilray got filled at half position today, Tuesday, at 2088. I think 80 was the exact precise low. Earnings are out after the bell. notice what I've done. I've wide scaled, trying to buy. If you're buying 500 shares of this stuff, then you're buying 250 shares at 20.88, 250 shares at 19.12 if it gets there, and a stop is 18 bucks even, hard stop. Capri Holdings, that is Michael Kors. Trying to buy Capri Holdings. I think the higher end as we get into January and February is going to pop off the charts, so we're praying for a little pullback here. Red Rocks Casino, which is the Station Casino people, the Palms people now, that whole conglomerate, I'm looking for them to pop. I think longer term it's great. I know I posted this yesterday. It may be redundant if you watched yesterday's video, but my boys at MGM, and even Penn National Gaming, Penn is the stock symbol. They look healthy long term, man. So you can take a chance to just, if you pause this, you can read all of this. I already gave you my opinions on gold, my outlook on euro currency. I just wanted to make sure I spent a little bit more time today going over what we're trying to do and why. Did things change in my mind? No. Am I looking for a little pullback in the market? Yes. Would I love to see a pullback in the Russell to get boat-loaded long? Absolutely. We've made, believe it or not, in this trading range in the Russell, we've banked some serious coin. You could see if I may be so bold. We have, let's see, Russell. Look at all the trades we've done in the Russell and made money. So again, I got my finger on the pulse of the Russell. It hit up at resistance. Next pullback, if we get it, buy the Russell going into year's end and into January. Thus the term, the January effect. Anyway, thanks for watching, and I hope I kept this short, concise, and to the point. I think the market is still corrections coming two ways, sideways and down. I'm not expecting anything more than at best a 0.5% pullback in the market to maybe 1.5% if we get that. And it's going to have to come on some kind of big news. But I think a lot of people have figured it out that the economy's doing well, the global economy's doing well, and with crude oil stuck in the mid 50s, how do you not expect some of these energy companies, unless they're brain dead, not to make money at double nickel average price for crude oil? Thanks for listening, and I'll post more through the week if things change. But at least you got an idea of what the type of work I put out, the quality of information with actual orders before they happen, so that you can be better prepared whether you want to take those trades or not. And again, we have an actionable trade performance that we post for complete transparency. Thanks for watching, and have a great rest of your trading week. Thank you, gang.